Ladies and gentlemen, welcome to another edition of Independent Speculator Interviews. With us today is Labrenz, CEO of Pure Gold Mining. And Darren is somebody I've known for some years. I've been to the flagship property, the Madsen Mine in Red Lake, Ontario. So I know a bit about this, but I want to let Darren go ahead and tell us something about the project first. Give us an overview and then we'll get into Q&A, Darren.
Absolutely. So thank you very much, Lobo. It's great to do this interview. We are Pure Gold Mining. We have the Madsen Gold Project in Red Lake, Ontario. We acquired this project about 4 years ago, basically built on a premise that we felt that the Red Lake camp, in particular the south end of the Red Lake camp, had a lot of opportunity for additional discovery. The project itself is centered upon a historic Madsen mine, which has produced 2.5 million ounces. When we acquired it, existing mill on site, tailings facility, and a resource of about 1.2 million ounces. Over the last 4 years, we've built a geological model. We've tested it with over 200,000 meters of drilling. We've increased the resources to 1.7 million ounces of indicated and 300,000 ounces of inferred. We initiated a preliminary economic assessment that showed a robust long life mine, and last year we initiated a feasibility study and really are on the cusp of production. So in a difficult market, we've moved this project dramatically over the last 4 years. It's been full speed ahead, and we have an exciting year ahead of us.
Okay, well, that was a rapid fire overview, but I think our readers will get it. And yeah, honestly, most readers are readers of my former work, and therefore many of them are familiar with you and the Oxygen Capital Group and everything Mark O'Day, who is one of the Explorers League members, right? So in general, we're fans, and I remember this story from the very beginning. And I remember when the property was first picked up and put into Pure Gold, the story was that the prior operators had done it wrong. They broke their pick, they shut it down. It was deep, and they never really looked around for what might be lying around near surface. And you guys did, and you made new discoveries, and you've drilled off new resources. But then in the PEA, I noticed that we talk about going into production down deep again to the Zone 8, which was the highest grade leftover gem left by the prior operators. And it seems like the story has kind of gone back and forth to me a little bit. Can you tell us a little bit about why that's happened? And if you're going to go into the previous stopes and mine again, why will you be able to make money when the previous operators didn't? And where does the new stuff near surface fit into this story? That's a big question.
Yes. Yeah. So when we acquired the project, we took a very holistic approach. We walked under the ground and looked at what was there and what wasn't there. One of the things the project is blessed with is an extensive data set that we were able to glean information out of. What was lacking was that project view. And so in the first 2 years, we covered over 3,000 outcrops through mapping. We completed an entire geochemical property survey for the 47 square kilometers that we currently hold. We flew an airborne mag survey, and all those were the building blocks that we used to establish an interpretation on the project level. And that was largely led by our VP Exploration, Phil Smerchansky, who has significant experience in the Red Lake camp. Our chief geoscientist, Chris Lee, was working with the mine data and working really with a lot of the mapping information that had gone into the project over that 36-year mining history. And one of the things that he picked up was that mineralization, whereas it was previously believed to be confined to a single rock unit, we determined that it in fact moved across those rock units, or as we said, transects stratigraphy. And so really what tied it together was it is a structurally controlled gold deposit that puts it in the same camp as what we see to the north of us in the Red Lake mine, and really matches everything you see around the world in Archean low gold systems. Once we recognized that, we were able to follow those structures and identify opportunities. And yes, we were focused on surface where lower cost exploration is easily achieved. And we made a number of discoveries. We discovered the up dip representation of the high grade 8 zone, which is deeper down in the Madsen deposit. It's called Russet South, and today we have a resource on it. We traced those structures to the south of the historic Madsen mine, and we discovered the Fork zone, which has now got a resource on it. Late last year, we followed the structures another 1.5 kilometers to the south into an area that we call Wedge. We started to drill in late last year, and over the past 6 months, we've been drilling fairly aggressively in that area, looking to build a resource which we'll disclose in the tail half of this year. That interpretation, over 200,000 meters of drilling, went into an updated resource where today, as I stated earlier, we sit with a 2 million ounce resource, including 1.7 million ounces of indicated material at just under 9 grams per ton, and 300,000 of inferred at close to 8 grams per ton. Based on that resource update, we initiated a preliminary economic assessment which considered the entire resource. And so in that preliminary economic assessment, we show a 14-year mine life. We have a very low capital hurdle with 51 million Canadian, and that's because we take advantage of significant sunk infrastructure, the mill, the tailings facility, and existing access points. With that, we generate a 47% after-tax IRR. So while we do incorporate some of the deeper parts of the resource, mining commences at surface and mineralization that we've identified through recent drilling. In fact, in June of this year, we initiated a bulk sample underground from the existing ramp. We extended the ramp 87 linear meters. We're passing through the base of 2 proposed stopes from our PEA, and we put out results last week showing positive reconciliation of both tons and grade from the initial mining work in that area. So we're quite excited about our first look at the mine from the ramp.
Okay, well that sounds good. Let's talk a little bit about the near-surface resources. I remember the story about the original mining being mostly confined to the Austin zone or Austin horizon, and then there was the parallel McVeigh where there had been some work, but it seemed to peter out. And then the geological insight was that if this was folded over, that the plunge would be in the opposite direction. And that drilling seemed to confirm that. And there was a great deal of excitement about the McVeigh. It could be a whole nother Austin. And in fact, your drilling showed some very good success there. But to my mind, it seemed a little bit spottier, not as consistent as the Austin. And you didn't even mention it right now when you talked about russet and fork and all these other things. Are we still looking at mining the upper parts of the McVeigh? And do we think it has the potential to still be an entire another Austin, or is that off the table now?
Yeah, so I didn't mention it because we're settled with these historic terms, Austin, McVeigh, and those reference the historic rock units that were deemed to have controlled mineralization within Madsen. It is a structurally controlled deposit, and those structures cross the Austin into the McVeigh. And so when we're talking about mineralization within the Austin, mineralization with the McVeigh, it is the same mineralization. Now, the orientation or plunge controls on those do change. And it's a structural or geometric relationship where the intersection of those rocks and the structures define that plunge orientation. So yes, we are currently mining in what we call the McVeigh horizon. That's where our test mining is occurring. We have drilled it off from surface down to about 500 meters. And we're seeing positive results in that test mining again with about 3,100 tons extracted at a grade of 9.2 grams per ton to date. So we're really quite excited about what we're seeing there. The continuity has been quite good from underground. It's been as we expected it to be. And importantly, as we move forward, we're doing a very extensive sampling program from underground. We've got 2 chip sampling lines on every face. We're taking 5 samples or muck samples from every second scoop that comes out of there, which translates in about 1 sample per 3 tons of material. In that 3,100 tons that I described, that's represented by over 1,000 muck samples, and so we are seeing good continuity. We are also drilling into the walls with a bazooka core rig as we move along, and we've identified parallel structures even in an area that's that close to the ramp and that close to surface that we have drilled a fair bit from surface. And so those additional opportunities are things that we're realizing from our active test mining. If I step more broadly beyond that and you look at the property historically, and in fact when we acquired it, people talked about the Madsen mine, which is a historic producer, the Sturt Olsen mine, which we also owned and produced on the property, and we talked about Russet South and Fork in the 8 zone. These are all part of the same mineral system. They're all controlled by those same structures. So as you move from north to south, you go through the Madsen, Austin, McVeigh, 8th zone, through into the Fork, through into the wedge area I described, and you've covered now a 5-kilometer extent of mineralization. We've defined it from surface down to a depth of 1,400 meters with our own drilling within the north part of the mine. Mineralization 250 meters below any historic mining. We returned 34.3 grams per ton over 4.3 meters. There's a historic hole down at 2.1 kilometers that really demonstrates that down plunge potential. But more importantly, as we step across that 5 kilometers, there's a number of wide open gaps that are prime for testing for expanding that large mineral system.
Well, that sounds very exciting, Darren, but let me just make sure I'm clear on something. So, because you're reinterpreting and you're looking at a new model, are we going to see the terms McVeigh and Austin that we used to see anymore, or are those going to be dropped from future press releases?
We still describe them in that fashion because they're so entrenched. It really refers to more a position within the rock stratigraphy as opposed to actual deposits, if you will. But you will still likely see them. When you're in the McVeigh, you're further in the footwall. When you're in the Austin, you're further in the hanging wall of what are the same mineral system.
Okay, so you have plenty of targets, and not to beat this to death, but just
Mhm.
so I'm clear in my mind, in what had been seen as the McVeigh side, is there still potential for that to keep going at depth and be as big as the Austin someday? Or,
Yeah, I mean, there's absolutely potential. We drilled it extensively in that top 350 meters, less extensively below 350 meters. We do have some historic holes that were drilled targeting the 8 zone that pass through what you would call the McVeigh, and they hit mineralization at depths of down to 1 kilometer. So that kind of pins it down to depth. Rather than drill that from surface, our goal here is to realize new production and generate cash flow and be able to realize some of those resource additions potentially through some additional drilling as we're mining to depth.
sure, no, that makes all kinds of sense. So then moving along to connecting the dots, and I love
Mhm.
exploration, and I love the sort of the following the theory and then testing it and then finding whether the data supports it and making a discovery based on the theory. I love that. And you've done it once with the fold idea. And then there was the idea of the 8 zone connecting up dip to Russet South, which seemed to make sense.
Mhm.
And your drilling seems to be bringing those, haven't quite connected the dots entirely, but they're getting closer. Can you update us on that and how well that's coming along? And when do we
Yeah.
get to break open the bottle of champagne that we really have connected those dots?
Yeah, I mean, it's certainly an exciting target. The 8 zone sits even further in the footwall from the Austin McVeigh that we described. It is higher grade. In the resource, it runs closer to 20 grams per ton versus the historic run of mine at 10 grams per ton. Our current resource overall at 9 grams per ton. So it's clearly higher grade. It has a little bit different style of mineralization. It's more controlled by quartz veins with significant amounts of visible gold. It sits within a broader ultramafic rock package, and it's quite similar to a lot of the high-grade discoveries that have been made over time in the Red Lake camp. The 8 zone is open. It is open up and down plunge, and we've just finished recently a very significant relog program where we've gone through and relogged all of the historic core on the property, including all of the drill data available for the 8 zone. We've brought it into a consistent logging format into our own geological model. We've brought it into a common modeling package where we incorporate all the data that we have, and we've interpreted that. And a couple of things that have come out of it are we recognize an alteration signature for the 8 zone that is broader than the 8 zone itself, and we recognize some key structural controls within the 8 zone that we think we can follow. Back 2.5 years ago, we did something really simple, and we just pointed it to surface. That was the area that we call Russet South. Our first drilling in the area was highly successful in identifying mineralization exposed right at surface. Earlier this year, we extended that mineralization a further 100 meters to depth. So we are kind of pushing the gap between the two, but there is still a lot of space there, ranging up to a kilometer and a half between them. Right now, we've got 2 rigs active in the property. We've got an additional 10,000 meters of drilling planned between now and the end of the year, and one of those rigs is in the process of testing that gap. And so we're testing some of these ideas that have come out from the drilling in the 8 zone. And I'll just conclude that kind of conversation with an important point. So I talked about Russet South, and I talked about the 8 zone, and they're the same style of mineralization, and they sit in the same geologic environment. When you move to the south and you look at the footwall of the fork, it also sits in that same environment up against that ultramafic contact with similar mineralization. We follow that another kilometer and a half to the south into our wedge target area. We describe wedge by various target zones. In the footwall there, we have something that we call the wedge MJ, and that's in the ultramafic. If you lay the core down from the wedge MJ next to the 8 zone, next to the Russet South or the fork footwall, they all look the same. It's all part of that same ultramafic associated contact style of mineralization. And it really does support the premise that the contact that we see there has high prospectivity for additional discovery, not just extending the 8 zone to the Russet South, but also as they move along strike along that 3 kilometer window back towards the wedge target area.
Wow, that's pretty exciting. And for the non-technical folks out there, if I can boil it down a little bit, what you're saying is that you have a signature or a profile that's associated with this higher grade zone 8, and you're seeing it in other zones, and some of them nearer to surface. So we may see more tonnage in the future. This is me arm waving, not you. I'm getting you off the hook here. We may see more tonnage of this higher grade type mineralization shaping up elsewhere on the property and nearer to surface. Is that fair?
Yeah, I mean, that's certainly our goal. The fact that we've established it at depth and we've established it in multiple locations at surface supports that premise. There's a lot of work to do, but we're pretty excited about this target.
Well, that's pretty awesome. But before we move on from that, let me just be clear though. Connecting the dots between Russet South and Zone 8, is that something that can be done or should be done from surface, or is that going to be tested partially, and then when you get underground you'll finish connecting those dots?
Yeah, it's a great question. It's certainly more costly to test it from surface. We'll be in a better position to do so when we're underground and we're actively mining. Having said that, the current drill program that we're conducting today, we're able to take advantage of some previous drilling where we've re-entered those holes, and then we're wedging off of them. So it really reduces the cost, and we're able to test a little bit deeper in there with a much lower cost to the company.
Oh, that's terrific. I'm glad to hear that. And speaking of reduced costs, one of the questions I had on my mind is I'm aware that this is a past producer, and we're not talking about colonial Spanish times, since the Spanish never colonized Canada, but we're talking recent history, and we're talking something that was not so long ago in production and fully permitted, and many of those permits are still in place. But can you clarify for us, we say permitted, but nothing's ever entirely permitted. There's always some update, or the mine plan is different, so we need to modernize the things, or we need a new tailings facility. Can you talk to us about what would actually be required permit-wise, and how easy would it be for you guys to move forward here at Madsen?
Yeah, and you're absolutely correct. I'll start with the great news. Madsen is permitted as a mine in Ontario. And so what do I mean by that? We've filed an accepted closure plan that's fully funded. We have our key permits, including a permit to dewater, environmental compliance approval for air and noise, which kind of governs all the ventilation and noise emitters on site, our environmental compliance approval for industrial sewage works, they call it, which really is your tailings facility. Those are the key permits. Now, you're correct. Those were issued in the past, in the 1990s. And our conversations with the regulators over the last several years have, made it clear to us that we need to amend those permits and bring them up to today's, today's regulatory environment. And so that work started about 2.5 years ago. We initiated baseline environmental work to support those amendments. We filed the first amendment about 6 weeks ago, and the second one will go in shortly. That triggers what they call a 1-year service clock, which means the regulatory bodies have up to a maximum of 1 year to return the amended permits. Our conversations lead us to believe that it will occur quicker than that, and we're targeting between 6 and 9 months for return of amended permits. Important to this is these are amendments. We're not looking at a new tailings facility. We're looking at working within the existing tailings facility. We're not looking at any real changes to footprint or throughput from those existing permits. And so we're not expecting an environmental assessment to come out of this. We're not expecting a federal process. We're really looking at a regulatory process to amend the existing permits.
That's very interesting about working with the existing tailings facility in particular. Are you saying that the existing tailings facility would last for the entire 14 years of mine life you have projected, or is that it would last for a startup phase for a few years and then you would have to build a new tailings facility?
Yeah, obviously that work is ongoing as part of our definitive feasibility study, but what I can say is we're blessed with a large basin that has topography working in our favor. So when you work, towards the north on the east and west sides, basically we have a natural rise that those existing dams tie into. The work thus far suggests that with about a 5-meter lift on the existing tailings dam, we can see the first 7 years of deposition go into the tailings pond as we know it. Then we shift across into the polishing pond and we start depositing in that area. We have modeled out beyond the 14 years at the rated mill capacity within that same footprint. Now this is not finalized as yet. It's ongoing work within the definitive feasibility study, but we certainly are sitting within the exact same footprint and designing a facility for closure.
Sure, that sounds good. So speaking of the definitive feasibility study, as I recall, that was scheduled for next quarter by the end of the year. Is that still on schedule? And there was even potentially a construction decision, a formal construction decision after that comes out. Are we still on track for that schedule, or any delays there?
Yeah, we're on track. That is one of the key milestones that we have coming between now and the end of the year. The definitive feasibility study, which we initiated last year, is set for completion by the end of Q4, and we'll see a number of milestones between now and the end of the year. We anticipate putting out a resource update in advance of that definitive feasibility study. We'll see the definitive feasibility study, and we're doing some early stage scoping level work, if you will, on some of the satellite zones to look at what they might look like from a mining perspective and how they might ultimately impact the production profile of Madsen moving forward.
Okay, well, that sounds pretty solid. And so if we have a construction decision, then presumably that moves us into the mine finance package phase and or with or around that. So project finance is a separate thing. To get there, you have a few deliverables in the very near term. And I presume you have cash in the bank to cover all this. What's the budget for the remainder of the year or until that construction decision in project finance? And how much money do you have in the bank?
Yeah, so at the start of September, we had 15 million in cash, and that 15 million fully funds us through our ongoing activities through all the milestones and well into next year. So by that, I mean, it includes the 10,000 meters of drilling, the test mining that's ongoing, feasibility study completion, and ongoing work to amend our permits. So we are fully funded through that process. The next funds really that we require will be project finance, and those will be subject to the conclusion of the definitive feasibility study and a positive production decision.
Sure, and I guess maybe it's a little premature to talk about the finance facility and so on, but there are options. There are streaming deals. There's conventional debt. People have done it in different ways, and I assume you've started those conversations and you're starting to look at term sheets. As an investor or a potential investor today, I'm looking at 256 million shares issued and outstanding. That's not totally, Australian style count, but it's pretty high up there. Do I need to worry about more dilution as part of this or not? Or how would you address that concern of potential shareholders about possible dilution in this process?
Yeah, so we're cognizant of obviously of our share capital and dilution, and it's one of the key things that's driving the management group is to minimize dilution. We'll look at all options with respect to financing and making a decision there based on the lowest cost of capital and the ability to retain shareholder value. I would like to say that the most likely outcome here is a debt facility, a traditional kind of project finance, and what that ratio looks like at the end of the day will be determined by what the cash flow looks like out of the feasibility study, what the final capital numbers are, what our share price is, and what risk appetite is. But all of that's done with the overriding goal of minimizing dilution.
All very sound and solid sounding answers. I appreciate your confidence there and your straightforwardness. That's a key issue that investors want to know about. It occurs to me, though, that I think about this. We talk about going into production at Madsen. You've already got 2 million ounces, and you've got all these targets for other things. It could be potentially not just bigger, but much bigger, and you're actively testing that now. Is there a scenario where you don't actually put this into production, that maybe your neighbors decide that another high-grade mine in the Red Lake district is something they'd like? Are there provisions for protecting shareholders in that case? Do you have a poison pill provision, for example, or if there's an aggressive takeover while the market is still down and you're still working on it? Or let me rephrase. Your corporate goals, are you really hoping, not just posturing, but really hoping to build this mine yourselves and become a miner? Or is it a better solution for everybody if you get a nice premium takeover offer and we all go off to build the next company?
Yeah, so we're absolutely focused on building a mine here and building a mining company, and it's absolutely the right decision. My background, I am a geologist. Worked for 15 to 20 years at Placer Dome mostly in operating mines, and have had the benefit of taking one particular discovery from that first drill hole through exploration into the feasibility study, through permitting, and actually was there managing grade control when the first ore was extracted from that deposit. So I have that background.
Sorry, which one was that, Darren?
That was in Tanzania. I was in the North Mara operation in the Gakona deposit.
I have not been to that one, but kudos to you for that. That
And
must have been
certainly,
exciting to actually get to see it from the beginning to, from drill hole to first pour.
yeah, no, it was a fantastic opportunity to kind of participate in every facet of building a mine, right from that very first drill holes to building the resource, to expanding the resource, defining the various options under a feasibility study, putting it through permitting, and actually seeing that first material come out. It's a pretty rare opportunity to do that. Internally within Pure Gold, we're building up the teams. We brought in Ken Donner about 2 years ago. He's our vice president of operations. He's got 30 years of operating experience, first 20 years of which were, mine manager. He operated the Snip mine, Snap Lake, Julietta mine for Bema, McRace for Oceana. And then in the last 10 years of his career, he's really been focusing on that, the building up and starting of operations, which is exactly the stage we're at. He's been instrumental in, us reopening the underground and commencing the test mining and leading the charge through the feasibility study. So we are on that path. At the end of the day, our job is to look out for our shareholders' value and create value. And I'm focusing on the path that's gonna maximize value for shareholders. When you look at the landscape around us, there have been a number of acquisitions that are looking at retrenching risk and looking at high quality, high margins assets. And we think, well, in fact, we know we have one here. There is a real scarcity of these types of projects worldwide. And having something that's one of the highest grade undeveloped deposits in Canada is a great starting point. To do so with existing permitting framework in place, with an existing mill in place, existing tailings facility, one of the lowest capital hurdles around at 51 million Canadian from the preliminary economic assessment is pretty rare. And so we recognize that people are going to have a look. We're going to focus on building a mine, and we'll do what's best for the shareholders at the end of the day.
Okay, well, you've got some great answers to tough questions. I very much appreciate you being a good sport about that and letting our viewers know. So thanks again for being with us today.
Thank you, and I really appreciate it.